All right, I am live. Thank you so much, everybody, for tuning in. This is market analysis from Trading Titans for October 29th. Thank you so much for tuning in. We're going to be going over some of the movements that we've been seeing over the last couple of days. There was some downturn in cryptos to have some of them return back already. However, before we get started, I wanted to take a moment and just talk about this age and what we're expecting over the next few months. I think that it's important to be conservative. While it's exciting, it can be discouraging at times, especially when we see days like over the weekend where things drop down. And I think one of my positions dropped like 30% in a day, and it's come up with some of the people that I've talked to about that hey, this isn't working out the way that I thought. Yeah, well, the trade's not over yet. You haven't cashed out yet, and there's still a lot more time. And so what happens is that we get caught up in a mentality, and this ties in with probably the most important thing about trading, and that is having a clear mind and recognizing that there are no losses. Yes, you might lose some money, but that's not a loss. That's a learning opportunity. Oh, look at that. I went in too early. Or, oh, look at that. That asset was actually garbage. Oh, look at that. And so instead of looking at it as a loss, look at it as another learning opportunity. That's really what that's the secret to life right there. When hardship hits, you can even look at that as a learning opportunity. What can I learn about the attachments that I have, the things that I have that I feel identify me? And how do I release those attachments so that those things no longer identify me, so that when things like this happen, I don't get, it doesn't shake me. And now this, again, the positivity that I hold towards this whole trading thing and the assets that I'm holding, and even if it drops down 30%, why am I not freaking out? The reason why is because I know of this day. I've known of this day for quite some time. And when people are aware of what's happening, that automatically brings them down to that a knowledge level with that clarity of what's happening that can alleviate some of the fear. So let's talk about where this is headed. We have 5 major industries that are replacing many of the industries that we have today. We're going to be saying goodbye to hundreds of different manufacturing processes. Let's take computer chips, for example. Most of the computer chips that are made on Earth are made in Taiwan. And that's a major center for a lot of computer chips. That's why China wants it, because they want control over all the chips. Well, people don't realize this, but a couple of years ago, when that was the threat, Taiwan said, go ahead, you come in here, you set foot in our nation, and we'll blow all of our chip factories to smithereens. We don't care. You don't get them. We know what you want to do with them, and you don't get them. So Taiwan put the foot down, which was rather interesting. But what I find even more interesting is I think I know why. It's because they knew what the future of computing would look like. You see, already this year, they've been able to create prototypes of computer chips that are actually utilizing crystal and light, because crystal can contain a lot more data than traditional electronics, like the hard drives we have and all that stuff. They pale in comparison to the amount of data that can be held by crystal. And so they are now creating computer chips made from crystal. And this is actually requiring an entirely new manufacturing process. Literally. The chip manufacturers are having to gut their chip manufacturing plants, completely renovate the entire building because chips are going to be made differently. Now, this isn't happening right away. In fact, the renovations have only just begun, and so there's likely going to be a couple of years before we actually see these chips, in our day-to-day devices. Possibly even more than that. 2 years is expected to be when they can actually roll out these brand new manufacturing plants making crystal computer chips. That's going to completely, yet again, create another wealth transfer to the little guy. And the reason why is because it makes more computing more available to more people. Why? Well, because it looks like these manufacturing processes are going to be largely governed by AI. Well, that means that it's not going to take incredibly long, probably by 2030, where we'll be able to make the computer chips we need in our garages. So this is unlike anything that we've ever encountered before, where basic manufacturing, even mass manufacturing, is going to be available in people's garages. We're going to have people have these new high-tech 3D printers making vehicles and in their garages, and they're going to be fully operational in the form of transportation, probably flying, that we will be all taking wherever we go, 500, 600 miles an hour. And we'll be making these machines in our garages for, $100, $200 worth of materials, and maybe $50 worth of electricity. Like the scope of innovation that is coming forward as a result of this machine that we've built is staggering. And it's also giving way to other industries that have never had much of a rise. We have a little bit of synthetic biology that has been rising over the last 10 years or so, where people are doing really amazing things with like liver implants and stuff like that. But when you start combining some of the other technologies coming forward, like nanotechnology. Well, nanotechnology, you combine that with synthetic biology, and now you've got the ability to start 3D printing organs. I'm not saying whether or not this is good or bad. I think that there's lots to be said about too much of a good thing can lead to disaster. In fact, there's a book that's very, very good. It's called Hormageddon. If you ever get a chance to read that book, read it. Hormageddon. And it simply is just simply talking about how much good stuff has occurred over the last 100, 200 years that is leading to disaster. And so I think that synthetic biology and nanotechnology, you combine those two things, I think that would likely result in some bad things. However, the opportunities that are coming out of this are going to be so staggering that we're going to be having crises that teach us amazing lessons. And those lessons are going to be learnt to the degree, I should say, those lessons are only going to be learnt by specific people who allow degrees of lessons into their lives. Many people are going to look at this as a very disturbing time. Already, a lot of people are really scared about AI. It's like they're terrified that it's going to take over the world. Well, it's not going to take over the world. Somebody who knows how to prompt it is going to take over your world. And I'm speaking loosely in general terms. I think of, people who work at desks. If you're working at a desk, you will not have a job by 2027. There's someone is going to know how to tell a computer how to do your job at the computer. That's just the way that it's going to be. Now, that person who knows how to prompt AI in order to do your job, they are going to be like a manager of AIs that are all specialized to do all the jobs necessary for that particular company. So with these innovations are going to come new opportunities. You see, when people are not spending 8 hours a day, 10 hours a day working for someone else because they have a machine working for them, that gives them opportunities. You know, it's funny to me how they think, oh, AI is going to take over the world. Doing simple tasks that we are not supposed to be doing in front of a screen. You think that's going to be a bad thing? Okay, you're going to experience bad things in your life. You're going to experience a loss of a job. You're not going to know what else to do with your life. You're going to be in despair. You're probably going to get depressed because that's the image that you have foreshadowed into your own life. That is the projection that you're sending out onto this holodeck, and the holodeck is giving you exactly what you're seeing as in your mind as a mirror. So where am I going with this? If you want to appreciate the abundance that is already in the ether, available for you to take and available for you to start utilizing in your life, you are going to need a different mindset. You're going to need a completely new way of thinking. And as you, for instance, as you come to these trading analyses, you'll start to learn the language of these opportunities, and you'll start to be able to pick them out and identify them for yourselves. That is my intention with this. This whole thing, this whole experiment of this market analysis, this is done many times. Lots of people do it. In fact, you can go on X or YouTube and you can probably find better ones than the one that I'm doing. But the difference between them and me is that I'm going to be teaching people the mindset for the future. Everybody else is just teaching, you know, the basic, oh, look at the market cap of this one. Oh, look at how much it's grown over the last 3 days. Oh, look at, you know, all of that stuff. And it's not wrong. It's not wrong. They are correct in their analysis, but they are not teaching people that mindset of what we can expect in the future so that people can find opportunities of their own. That's what I'm after. I don't want you to just follow the opportunities that I'm following. I'm showing you what I'm doing so that you can see what works for me and the way that I analyze and the way that I study things and the way that I think about the future. But what I'm really after is for people to learn how I think so that they can go out and snipe these opportunities themselves. This is not financial advice. This is mindset advice. This is about shifting your paradigm. And that's why I do these market analyses, because that's more important. Honestly, I don't want anybody here to be a trader. You think that you should be spending time in front of the computer? No, you shouldn't be. We end up doing it because it's a tool that helps us get our work done. But I want to work you out of ever looking at the screen again. That if you are using the screen, it's to directly connect with someone else live. That's the only reason I think we should be using screens. Or to, you know, read information that AI gives me, or, you know, and my AI, I should clarify. It's going to be my own AI that reads the internet for me and summarizes what it is that I need to know every day. That's what I'm building. Why? Because I'm not supposed to spend time in front of the screen. None of us are. None of us are. Did you know that one of the reasons why I've had so many health issues is because I've been standing at a desk that does stand up, sit down, and it's plugged into the wall, right? And so I, you know, electricity, and that's how I get all the lights and monitors and everything. I've been having that all plugged in into this beautiful desk that I have that stands up and sits down. It's a glass top. I can use a whiteboard marker on it, take all my notes. I can erase those notes. It's just it's an awesome desk. I love it. But then I find out using one of those little meters that can detect electrical EMFs and radiation from, electrical frequencies. Well, I come to find out that this desk that I've been working at since 2017 is when I got this desk, 2017. And to give you an idea, in 2021, when the vaccine mandates came out and I was helping people, stand up against the tyranny, and showing them how to lawfully not comply, there were days I was spending an average of 16 hours a day at the desk. Now, that's bad enough as it is. I wasn't getting enough exercise. I was not taking care of my body. I was just focused in on all these requests to help me keep my job. So I stayed at the computer that whole time. But here's where I'm going with this. One of those EMF things, just earlier this year, we took one of those meters and stuck it close to the desk, just close to the desk. Not sticking it on the desk, not touching it like I do all the time, or sometimes I lean up against it. But the desk is 8 times the lethal limit of an exposure throughout a day. 8 times. So if being there, sometimes 16 hours a day, I was actually exposing myself to 8 times a recommended, like a workplace hazard, basically. I was in that environment, killing myself over this desk. Now, why do I bring that up? We're not supposed to be sitting. In fact, come to find out in this journey to heal, I find out that chairs are actually specifically designed to weaken your body. We're not supposed to be sitting in chairs. We're supposed to be sitting on the floor, either in a crouched position or on our knees. Like, how yogis do it? Yeah, that's how we're actually designed to sit the best. And we're actually supposed to be able to get up and out of that position without help. We have weakened our bodies as a result of the lifestyles that we have adopted over the last 100, 200 years. And there are medical journals to support everything that I'm saying as well, that just don't get talked about. Oh yeah, look at that. And then it just gets, oh, there's the study. We know that now. Then nothing gets done about it. And for the first time, people at the individual level are taking governance over their own lives. And it's changing everything. My health is turning right around as a result of this. I am, in fact, growing a new tooth. Because it's possible. And we've been lied to be and deceived into thinking that we don't have the ability to self-govern our lives, our health, our families, our communities, and so on. And so, yeah, I wanted to share that before we really get going. This is such a transformative time. In fact, it was in 2017 and 18 when I was first starting my community building work. I was telling people, this is biblical. Okay, there will be scriptures written telling the story about what we're going through today. This is so transformative. It is going to shift everything that we've thought about ourselves. It's going to completely rewire and re-engineer our paradigms. And for those that can't handle it, I don't think they're going to make it. I honestly think they're not going to make it. So let's look at some charts now that I've done that little rant. Let's look at some charts. Start with silver. We talked about the retracement. Oh, I get to share my screen now. There we go. Here's silver. I'm gonna get myself over to the side nicely and just double check that I've got. You know what I'm gonna do is I'm gonna even. Yeah, there we go. Can you see okay there? Hopefully you can see. Got the numbers up there anyway. I'll move it over. Maybe that'll be helpful if I move it over a little bit. That way I can do this. Let's get rid of this here. Close. All right. Now, oh, I got another one in the background. Oh, that's one of my wallets there. Okay, cool. Awesome. So silver had that retracement that we talked about over the weekend. It is now Tuesday, so second day in. And instead of hovering, today is the day. We're blasting off here. We're up 1.94% from the high, and the bulls are definitely having a great day. If we zoom in here into that 4-hour chart, we can start to see the breakdown. So you can see after that retracement, we kind of hovered around for a little while, but then beginning of yesterday, right here is where it just has been steadily climbing. So that's a good sign. I do anticipate this continuing to rise. That retracement was sufficient given the situation. And yeah, I would have liked to have seen it come down a little bit further like I talked about before, but this was enough. The fact that we had this nice big long arm here might have been just all it was necessary. This retracement would have made it all that was necessary. So it's headed back up. We've got gold making a brand new high again, just like I thought it would. So now the high is 2760. What is it? 2763. And currently at this time, it is $1 less than that. So a little bit back, but yeah, it is now the high being 2763.34. Amazing. Amazing. So what can we expect here? Well, this retracement was pretty shallow. This the retracement that we saw on the 23rd of August right here, or October rather, that retracement was a little bit shallow. So this movement may show a little bit of resistance. We might not see it climb up nearly as fast as we've seen in the past. But that being said, we could very well see a quick shot coming up and then retracing back, hitting this all-time high. I think that there will be a little bit of resistance, which we can then expect to see become support. And that's when we know we're on our way up. Got S&P 500 still not able to get back up to its all-time high that we had last Thursday. It's been having a difficult time actually, and right now the Bears are winning today with a big drop here. Yeah, well, so this is what happened there at 7:30 when the orders came in. So likely see some more pullback today. It could recover, but we'll see. Yeah, we'll see how it plans out. Oh, that was a weekly chart. So yeah, we'll be watching that one. US 30 also down, definitely not trying to meet up with its all-time high. In fact, that retracement is coming back nice and deep into this pivot zone. We'll likely watch this consolidate here over the next little while. I think that we'll probably see some jumps, the week. Well, that's already next week, isn't it? Elections next week, I think. Yeah, it's the 29th. Elections are the 5th, I think. So, or when is election? I don't even know. Does it show
5th.
here? The
It's the
5th is the election.
Yeah.
Okay. Yeah, the news doesn't show it on here yet. So yeah, the 5th is the election. So we're going to probably see some chop between here and there. Things are usually undecided right before an election. And then that's after that when everything just takes off. And the general consensus, even within cryptos, is the same thing. We'll probably see the main coins, layer 1 coins, take off a bit. They'll probably move, 30, 40% or so in the next couple of weeks. And then, oh, look at that. My desk is still plugged in. I plugged it in earlier to adjust it back to this level. So yeah, some chop here before the election. We'll see things take off. Even the cryptos are, they're saying that there's still some insecurity within the price right now, and it's largely because of the insecurity of people have over who's going to get to sit on the throne next time for season 3 of the Great Reset. And so yeah, that can cause it. That can do it. So the NASDAQ right now is running at $20,382. It's not coming back up to that high that we had before. So it's having a difficult time, similar to what we see within the Japanese markets. That retracement coming back down below this pivot point, it's managed to bring itself back up and come into that pivot zone. But if you think about it, this was acting as it was this level here while it was in this pivot zone during this time here, I'll just put a little box around this. So this little box here, when it was in this zone, it was actually, this level that we're at right now was support. So if this can get a leg up over top, great. If this can get up over top of this support line, that'd be great. Then we know that we're going to continue up. But if we don't get to close above this and we see it declining again, or if we form a low lower than this low, that would be a sign that we're actually headed downwards. Now again, we don't have a low lower than this one, so it's not confirmed, but these highs are just not really cutting the cake. You know, it's showing a lot of resistance at this $40,000 level. Let's go on to some cryptos. Had a pullback on non-playable coin, but really it's just been ranging. Really, it's just been ranging. If we zoom into this 4-hour chart here, you'll see what I mean. So, you know, you can see here's this range right here. So I've got that big purple pivot zone. I'm going to shorten it, I think, because it's not really as relevant. Shorten it isn't really the word I'm looking for. I'm going to thin it out a little bit. This is more so what we're seeing happen right now, is this consolidation zone here. Yeah. So with that consolidation zone, again, it's just sideways right now. Nothing is really dropping out of this. This project still seems to be strong. And I shouldn't say seems to be, it definitely is. I mean, creating an all-time high in a meme coin and then not dropping down to, you know, like a previous pivot point down low, like down to here, that's actually pretty impressive. It might still retrace, but I'm not too concerned about it because the amount of activity within this community is still really high. It's amazing when you go into these, you know, Telegram channels or the Discord channels of some of these projects, you can just see how active they are. I went to a Telegram one yesterday for Sundog, which, you know, I went to go check because we had a big drop. This big drop here, this is what concerned a lot of people. But you know what's wild? In the community, didn't faze them a bit. They didn't even mention it. They were still posting, like, I went to the channel and there was like 40, 50 people all messaging each other, staying active. Well, that right there is clear indication that this drop here is fine. That doesn't mean much at all. Just reconsolidating, looking for people to catch the sale, basically. Now again, with Sundog and Bonk, you know, I didn't put a whole lot in them, and so that's kind of another reason why I'm not too concerned. But where it's at right now, it's actually pretty tempting to grab, because if we grab it from here, coming back to the all-time high, that would give us 148% return. Well, that's more than what I put in the first time. So if I put in the same amount here and win up to there, I will have easily, I'll have doubled what I put up in the first place. And then I can continue riding that if I want. So that's a good strategy to take. Whether I do it or not, I don't know. I know I'm going to be adding some more this week for sure. And I'm 90% sure it'll be ARK. Bonk is still building its energy here between these two trend lines. And it's down from where I purchased, but even in cryptos, you know, 11% drop really doesn't mean much. So I'm not fazed by this. With Woo, we're still kind of going back and forth. Really, well, nah, you know what? Now that I'm looking at this from another perspective, I'm going to grab these lines. Sometimes I put them down the middle of these trend lines just to see how, you know, how they line up. But I'm going to be more diligent in putting them at the tops and bottoms of these trend lines. I'm finding with crypto that's actually works better. That's an old Forex thing that I used to do, and I don't know. I find that cryptos behave just a little bit differently. So there we go. That's the channel that we're currently watching occur. So we're at the bottom of that channel. definitely headed up. This is probably going to cause some resistance eventually. You can see where I made that squiggle last time, how I figured that it would find some resistance and pull back. Well, sure enough, found some resistance. It went up to here and has come back down to show support, to find support on this lower trend line. So right now is a good time to grab it, even if you want to go short term, because from here even to that trend line is a quick 37%. So definitely a good time right now. Let's move on to ARK. ARK is yeah, it's still ranging here at this lower range that we've been here since Friday. So we've been here for 4 or 5 days, and this is still a really good time to buy. This is my favorite asset right now as far as potential. What's that?
Just move over slightly.
Oh, yeah.
There we go. Sorry.
You betcha. Thanks for letting me know. I like it when you tell me that, because I get, yeah, it's like, because the camera is off at this angle here, and so when I'm here, I feel like I'm in front of it, and then I realize, oh yeah, and then I'm covering up all the numbers. So yeah, this retracement here is just beautiful. It's probably one of my favorite assets right now as far as how the chart looks. This here, I would expect, I'm going to take away the squiggly lines because they're pretty irrelevant at this time. Let's grab a new one. So from where we are right now, we're likely going to see some resistance at this 2-cent level, and then come back down and find that support, and then have a good solid push up to this line here, where I think there'll be some more resistance before we get a chance to come up to here. Now here, again, there will be some resistance just because of how much resistance there was in the past. But between here and there, that is a nice, oops, I did it again. That is nice, from where we are, that's 100%. That's just getting started. That's not even taking it to the all-time high. From here to the all-time high, like I'm already in a trade here, and it's going to give me 391%, and that's buying it at 3 cents. Well, from where we are right now at 1.7 cents, the all-time high is 733%. So really, really good position right now. That's why I like this chart. Tau, yeah, beautiful retracement into this zone here, and it is coming back up. Definitely, if I would have had the extra liquidity, I would have grabbed a position here, because this is expected to go up to 5,000. So that would be a 10x from where it was. Here I go again, pushing the button. I'm just going to unplug this thing right away. Don't need it. All the electrical stuff that's in it, it's killing me. Okay, so here we have that. Yeah, so that's BitTensor. Coming now into this next pivot zone, may see some resistance and another test of this level here. But right now, the way this is looking, this deep retracement, because of this high, is actually, looks to me like that was this double take right here. So this pullback here gave rise to that high. And then this pullback here is just simply another test of the support. So this is what we call a double bottom. And whenever this kind of thing happens, we can expect the next push. The next push for this asset, I believe, like the next resistance that we'll probably see is going to be around the $790 level. I'm really still really tempted to grab a quick few $100 of this one, because 10x, that's a longer one. It's not supposed to happen right away. This one here is probably going to take till spring or even summer. Yeah, Injective token. Let's move on. This one here has finished a nice deep retracement, retesting that long-term trend line, and is now coming back into this pennant formation. Now we do have lower highs and lower lows occurring right now, so I don't have confirmation of an upward trend. The only thing I'm going by is more of a weekly chart. If we take a look at the weekly chart, we can see it's going to come in here so we can really analyze this. So here's why I do see a bullish trend. on the weekly chart. It's because since here, this low created a high. Now this high was not higher than that high over there, but that's okay. I wasn't looking, this isn't our indicator right here. Then it drops down. This low does not beat out the previous low, so it's a little bit higher, and then it creates another high. So I don't know if you were with me, Audrey, when we were talking about this, but in trading, whenever you see a formation, what you're looking for are 4 points, and we call it A, B, C, D, and those 4 points need to be in a progression of some sort. Now it could be that it's A, B, C, D going down, or like we see here, A, B, C, D. Now when an A, B, C, D is either progressively going higher or lower, then you have a trend. So on the weekly chart, we are seeing a trend because we have low, high, another low, and then, but this low does not go lower, it stays higher, and then another high that beats out the previous high, and then another low, which still hasn't gone lower. And so this A, B, C, D, we've already started on E. And because we've already started on E, that tells me that this is definitely coming into a trend out of that long-term downward trend that we've been seeing this whole time. This long downward trend is now broken out on the weekly chart, and it is showing an uptrend. Now, when we look at the daily, we just need to wait a little bit longer before we see the same evidence on the daily chart. Long term, yeah, because here's that low that we saw on the weekly, here's the high, here's the next low, here's the next high. And since that time, we've been doing what's called consolidating, where the highs are getting lower and the lows are getting higher, except for this one here. This is a big, deep retracement. And that's just to find that support. That's all that's there for. It's not bad. It's just take into account that it's not this low. So this here is a great position. And you can even see this M formation coming into play right now, where the M is right here. And then it goes like this. There is that extra, double in there, and that's fine. But the M formation, very, very encouraging. So let's move on. That's Injective Token. On to DSync. DSync is still going back and forth. It's loving this middle line right now, or it's not even the middle, but it's loving this line. It seems to have a difficult time getting over that 19-20 cent mark. It's probably a psychological level for a lot of people, but it's still, this chart is not looking bad at all. Over the long term, we're just seeing this price consolidation come down further and further, which is just building energy. That's the way to look at that. As it builds that energy and comes into this zone here, we'll eventually see it break out one way or the other, and likely at the distance that the opening came in. So this opening right here, the distance between here and there, we can just measure that. That is up 2,800 pips. So you can expect the same distance, 2,800 going up, that's 33. There's 28. So about 48 cents, or going downwards, 2,800. But my chart doesn't go that low. I really don't think it's going to go low. I think it will be breaking out up, especially coming into the AI bubble. Next, 0 by 0. Another one of the assets. I got two positions, one coming back all the way from June 15th, another one here, September 7th. And the September 7th month actually was able to find some nice growth, even hit 22 cents. But then the bears have been pulling back, and we've been following that long-term trend line ever since. Now, again, this low hasn't gone below this low here, and so this is not discouraging. However, it is important to see that this high right there That did not beat out that high. So this low is definitely setting a trend right now. Now, we can expect a reversal simply because of the timing of everything and where we're at. This has seemed to find support right here at that 10-cent level. That's 9.8 right there. And that has in the past provided good support, even way over here. Way over there. It still has the same, that's that same spot, right? Yep, 9.4 right here. So this has provided some great support in the past, and this big dip here that we had, that just might be a banker's candle testing, seeing how low it can go. So very good spot. We're at the support that I feel we're at the support that we need for this movement to come up and form a new high. I believe that the resistance that we see is going to be at the 27-cent level. Between here and there, I mean, 27 cents from 9 is quite a bit, but this is 11. Right now it's at 11. That's a 300, oh no, from there. That's going to be the resistance at 27, 135%. So you can double your money just between here and halfway to the all-time high. Beautiful. Free protocol. Nice, nice movements. We're seeing this beautiful swing back and forth. I'm going to go ahead to the 15-minute chart just so you can see how much movement there is here. Like, look at how much it just goes up and down and up and down. This is very indicative of high volume trading. And there are a lot of people coming in with large pockets. And then what's happening is that they're selling off because they're making their money. These movements, as little as and insignificant, the back and forth as they may look, if you zoom in further, check us out. Look at this. So from here, someone goes, oh, I'll buy, and they go ahead and make a quick 20%. And then they sell the whole thing, and it drives the price down. Well, where does it go? Down to here. That is how much cheaper. Now they're taking that amount, and they're getting 20% more. Then the next time they have that movement, they're going up 18% and then driving the price back down. And every time it goes up and down, they're making a trade. They're adding this is why it's called accumulation, because people are accumulating their positions every time they do this. People who are watching this, and they're spending 6 hours a day in front of the computer watching this closely. That's what they're doing. They're catching these very, very quick movements. That's not what we're doing. We're watching the daily chart, and we're going to be observing these movements at the more macro level because we're trend catchers. If you trade against the trend, you had better know what you're doing. And whenever we see these kinds of things, right? Obviously, you're trading against the trend 50% of the time, right? Because the trend is either up or down. Well, it's always going up or down. So if you're not trading with that long-term trend, your risk is a lot higher. And so you got to know what you're doing. Right now, we're just bouncing along this trend line here. It's just beautiful. Just beautiful. My little drawing there is just delayed, I believe. I'm going to go ahead and just move it over because it doesn't really change the plan. I think, though, that the resistance will likely be a little bit higher once we beat out this one. Link. Boy, I got a lot of assets up here. So Link AI. I do not have money in this, but it definitely had a beautiful retracement that I probably should have bought some. I'm pretty leveraged as it is. Okay, so we are, we're inside this zone. Beautiful. It's in that accumulation phase. I'll bet you even on the 15-minute chart. Oh yeah, look at that. See, same thing happening here. People are like, ooh, I'll buy right. Look at this buy right here. 10 cents goes up. Look at that, 18% in a matter of 4 hours. This isn't hard to do. You just got to know what you're doing. If I had the time, I would definitely be sitting here making 18% in 4 hours. And then coming back in to accumulate, 7% more so that I can do this little movement here and get another 8% out of the same money, compounding my compound interest. Magic. DEAI, or 01 Labs. This one has broken out of that pennant, but now I would say that we're actually following this. Yeah, so don't need that line anymore because now it's just a consolidation zone. So we have a high, we have a low, and the price is just bouncing right now between the two of them. And this is likely going to end up being the next, this is likely going to end up being the next pivot zone that gets formed. And we're going to need to find support or resistance before we can establish what trend it is. Because when it's ranging back and forth like this, we can't say it's in a trend. Long term, it's on an upward trend. But right now, it's undecided. Price is going sideways, they call it. FAR, speaking of sideways, ever since I got this one, literally just been ranging around, dipped down there on Friday, last Friday, when we had the little downturn in the markets. But then it's been, ranging since. Probably going to add to this position just because of how low it is. So much of it's on sale. Whenever I see things on sale for this long, it's like the universe is just telling me, you need more. TRX beautifully riding up that middle line of this trend channel here. Remember, this is algorithmic, so this is a curved line. This is exponentially rising, but it's consistent. And I think that we're probably going to see a breakout, maybe not so much with the altcoins right away, but after the election, because I think that leading up to the election, we're going to see the volatility in the main coins, like the Bitcoins and Ethereums, and then the what we call altcoins, basically all the other ones. They, like Tron, they are going to be experiencing it afterwards. So that's nice. We get to see it happen. We're probably going to get to see it happen in the main chains first, and then have the other chains follow suit after the election. That's the general consensus that we're at right now. As we're getting closer to the day, we will get more accurate. So here we have Solana. Solana is actually starting to kind of appeal to me. I've been negative about it in the past, and I still don't have the greatest of affections for it. But it is definitely backing a lot of good projects that are probably going to profit quite well here over the next 3 to 6 months. And it is expected to be at $500. That is what it would normally be if we take a look at, what Polygon has done, or what Ethereum has done, or what others have accomplished with the same market cap. So Solana is definitely not off the table. I'm not in it yet. I actually thought that it was going to go down, and it proved me wrong. And the reason I thought it was going to go down was because I was kind of getting my bias in the way. Now, technically, my analysis wasn't wrong. I figured that this retest here was going to give me the opportunity to buy. But now I'm actually going to need to wait for the retest of this level here, 158. So I'm going to get rid of my squiggly line here because it's irrelevant now. But yes, so here we're going to find some resistance here, I believe, and then dip back down and likely retest the 158 level for finding support to move upwards. So that's what I'm going to be waiting for when it comes down to this point. That's probably when I'm going to add some to this bag because, yeah, I mean, from here to $500, can't go wrong with that. And that's the all-time high is only 260. So let's go find 500. There it is. And from here to 500, let's go see. Oh, I did it again. So there's 500 right there. Oh, and my little thing's in the way. Yep. So from where we are right now to 500 is almost 200%. That's pretty nice. That's going to be, again, that'll be more of a slower process. It's not going to happen overnight. A lot of these altcoins that I'm talking about, like for instance, are these gaming coins, for instance, these ones here, these can happen in a matter of weeks. From the time it starts finding support above here, I think that this movement here, it'll likely take a matter of weeks. Whereas something like Solana, going from here up to 500, that could take a few months. XRP, very low right now. Great place if you want to catch some short-term profits as it bounces off of the, as it finds resistance at the top of this trend channel. This would be a good time for you to do that because of this nice deep retracement. And this retracement here didn't beat out this one or this one. You know, it's basically doing a nice strong test coming out of this price channel, and we'll see where it heads next. Probably in the next couple of days, I believe it'll come back in and find support on this line and then go ahead and shoot for the top end of that trend line. Under Modic, had that dip down. We had this descending wedge. Now, descending wedges, they do typically turn into descending price action. So no exception. It happened, and it's okay. It's only 33 cents right now. That means it's on sale. Because it wasn't at 33 before, it was at 36. So if you would like 10% off, there it is for you. That's Polygon. ADA. ADA has been climbing up since the weekend after that dip very, very strongly. In fact, I believe that was that final like, okay, I got my support now. Because this high here, coming up higher, reaching 41 cents, that was a nice little test to bring us out. And it was higher than the previous high. And that there is now the trend, similar to what I was showing you before. We have A, B, C, and D. If I go onto the weekly chart, you'll see it, but a little bit clearer. Rather, I should say it this way. The daily chart is showing this A, B, C, D a lot more clearly than what was shown in that other chart. I think that was S&P 500, or maybe it was the NASDAQ or something like that. But this ABCD pattern is very healthy. And since this D, our next lows have not beat out this one, have not beat out C. So technically, we're consolidating right now, likely accumulating volume. Great. That's what we want. This is a good thing. So this drop down here is likely just finding that support at that 30-cent level. Yeah, just above 30 cents. This was 31.7 was the low. No, the low was 31.3. And from there, it is finding nice support. I think probably find some resistance yet again. Yeah, it might even be there right now. This little trend channel here, that short-term trend channel, may be providing some resistance right now, but I think we're going to see the biggest resistance on this trend line. But once we break out of that, similar to what I've drawn here, we'll use that trend line as support and then start shooting out for some new highs. Ethereum, back up again to the top of that channel. Now this channel is getting more and more narrow. So I would say stop if you were looking at getting, you know, if you were looking at catching some of these movements to accumulate some volume, I would say stop right now. It's a little bit risky once it gets down to this level. Watch for where we're headed next. You know, the fact of the matter is this trend line is showing a lot of strength, even with this high beating out this one. We have another A, B, C, D, and then even the latest retracement hasn't beat out C. So we are definitely in an upward trend. However, on the weekly chart, we still don't have that same confidence because of how much there is yet. This red line has got to get beat out, and then again this purple line. So yes, showing strength. Yes, it might even go ahead and overtake those trends. And the daily chart is definitely showing good signs of that. I would like to see one more retracement. That's just my personal preference. Oops. All right, let's move on to Bitcoin. Bitcoin looking like it's challenging its highs again. Yeah, so it is right now just a matter of $2,200 away from its all-time high. That's nice. So it found support on this long-term trend line and is definitely shooting for the stars right now. Again, I think that we're going to see this kind of volatility coming into the election. It's going to be after the election when things go ballistic. And so now is the time to get in position. 71,602. Crazy. That's it for market analysis. Thanks so much for those of you who've tuned in. If you have any questions, feel free to comment or send me a message on X or YouTube. Be happy to help you get started. And if you missed getting into the session because of the little bit of a late start that we had today, no worries. We'll see you tomorrow morning, 7:15 a.m. Mountain Time. Everybody have a good day.